Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. In the week gone by, the Nifty consolidated with a narrow range with a stock-specific momentum seen throughout the week. Nifty ended the week below 25,000 mark with a marginal loss of 0.2%. Bank Nifty too experienced a drop of 0.5%. In the broader market, both small cap and the mid cap indices saw gains of 1.3% for the week. The market showed a combination of trends. Nifty is currently going through a phase of consolidation due to high valuation and a less optimistic outlook for Q2 results, like TCS reporting a moderate set of numbers. Haryana state election outcome boosted the market sentiment to an extent. On the other hand, institutional investors, FIIs, are taking advantage of arbitrage opportunities in the Chinese market, encouraged by stimulus measures and low valuation. However, the China rally seems to be faltering as investors were hoping for a further 2 trillion yuan stimulus and a stock market support fund, both of which were not announced. The lack of further stimulus is likely to erase some of the gains in the Hang Seng, which was already under pressure going into the weekend. It is yet unclear how China's stimulus unfolds going ahead, and it will shape incoming FII flows. FIIs offloaded approximately 28,000 crore, but this was offset by domestic institutional investors (DII) who bought more than 31,000 crore. Back in India, strong stocks have rebounded after last week's swift sell-off, and hence we see the broader market bouncing back. The Reserve Bank of India announced its fourth bi-monthly monetary policy for FY25 and decided to keep the benchmark repo rate unchanged at 6.5% for the 10th straight meeting. However, the MPC changed the policy stance to neutral from withdrawal of accommodation. Given the global rate cut momentum, domestic growth and inflation projections, it's very likely that the rate cut will happen sooner. Q2 FY25 earnings season has kicked off with a tepid show of overall earnings. Transformers and power related companies continue to report great numbers along with a business recovery commentary from IT services company like TCS. Going forward, we expect the Nifty 50 to consolidate between 24,700 and 25,500 with stock specific action prevailing as we kick off the earnings season. The low of 24,700 is an important one, below which we may see a decent fall. In terms of sector rotation, defense, railways, PSUs, and EPC related stocks are showing strength on charts and is a good area to explore in terms of the risk reward. Coming to news from Indian economy, India reported a jump in its tax collection in the current 24-25 fiscal year. The net direct tax collection soared 18.35% to touch rupees 11.3 trillion in FY25 between April 1 and October 10th. Comparatively, the tax collection for the corresponding period a year earlier stood at rupees 9.51 trillion. Official data released by the Income Tax Department revealed these numbers. It offers a great cushion to the Indian government to trim down its borrowing and spend money on the welfare schemes. Key takeaways for today: FI selling might slow down going ahead, providing stability to markets. The second quarter earnings have started with the majority of the index heavyweight reporting numbers in the coming week. This too will help in deciding the market direction going ahead. Focus to remain on stock specific actions due to the result or sectoral rotation. That's all for today. Wishing you a happy trading week ahead. Thank you.